Hey guys, welcome back. In today's video, we are talking about why AMC is extremely bullish, how we are exposing the short, AMC issuing cash dividends, and many more in this video. Firstly, we're taking a look at this. AMC is very bullish. Retail owns the flow. Deep effing value, where we take a look at right now the ratings for AMC, and you can see it's 9.4 out of 10, very bullish, and this is 6 independent firm opinions. So now we've already known that AMC has and always will be extremely bullish just from the fact it's undervalued, and we've talked about this from many different perspectives already, so I'm not going to bore you guys with that. But especially with recently, like we've said and like we've seen how institutions have been accumulating more and more of AMC silently. And now we're finally seeing how it's reflecting as more and more people are giving AMC a bullish rating, as more and more firms seize the opportunity of AMC, you start to see how the sentiment for AMC is changing right now. Once again, some patterns that you will notice is that whilst the majority of firms, the majority sentiment on AMC is very bullish, you will see some people who are still trying to maintain a sell target, a bearish rating on AMC. But if you pay close attention to who those firms are, you'll realize that actually they all have a common interest, which is, of course, they are all short sellers of AMC, and more specifically, they are the naked short sellers, the ones who have rehypothecated so many synthetic shares and are trapped in this place. And so those are generally the ones who are giving a sell rating, who are giving a bearish rating on AMC, but everyone else, whether or not they are involved with long AMC or not, you can see that their overall view on AMC is a very, very bullish projections. And now when you already take a look at the institutional ownership, 33.38% for AMC, we know that that's obviously not the case. We know that institutional ownership is obviously on the low side because the majority of shares are bought by the retail. And when we can see that it's a 33% institutional ownership, we know that that is, of course, a synthetic shares, and those are not the numbers that should actually be showcasing. But this is what we're seeing right now with the overall sentiment on AMC. Once again, extremely bullish, and it isn't a surprise considering how well AMC is performing, how well AMC will continue to perform. And so that's pretty much what we have to look out for. And then you have to realize the situation AMC is exposing and putting these short sellers in. So earlier we said about how when you notice the ones who are giving the bad ratings on AMC are all the short sellers, it's because there is so much at stake. This is a very, very old article, but I want to bring this to your attention because of how important it is and because of the fact it's still relevant. Nothing has changed from this, maybe apart from the fact that the numbers that are involved are way bigger. You can see there's a previous article talking about how AMC drama is exposing risks in $11 trillion world of indexing. And you can see wild moves in meme shares are ruling the ETF market. So this obviously isn't just about indexing, but this is just talking about in general how much AMC is exposing to these short sellers, how much exposure there is just by having the AMC shorts, just by having the AMC swaps. Now, this obviously spans into many different things. In this particular case, they're talking about indexing because of the ETFs created in order to locate shares of AMC for the sole purpose of shorting AMC. We've seen this with GME, we've seen this with AMC, some of the ones we've mentioned in the past are, of course, XRT and many, many others as well. But that's what we talked about in terms of the first point of how it's exposing risk, because they're creating ETFs for the sole purpose of shorting AMC. They mix in a few other stocks in there, but the main priority is to obviously locate shares or use it as a way of locating shares of AMC and then to short it. But then, of course, there are some other things that we've mentioned as well, like the swaps exposure is exposing. We've talked about the FTDs, and there's many, many more that's out there. But then you can understand that because this is still relevant and the number is even bigger right now, is why these short sellers continuously give bad ratings on AMC because of what's involved. One of the ones we've seen recently, like I said, you're seeing a bullish rating. This isn't a made up fact by me. This is literally what you're seeing. But if you take a look at Citi, what you'll see is that recently they gave a sell rating on AMC. Now with Citi, one thing that you will know is that they were one of the first ones to be found out to have synthetic shares of AMC, the Brazilian ADR shares. For those of you who know, you will know. For those of you who don't know, these are offshore synthetic shares that have been exposed. And once again, they have synthetic shares of AMC, and then they give a sell rating on AMC. And so you understand why they obviously do this. Now, let's talk about how we are able to then tackle these short sellers. AMC is already in a good position. The reason why AMC's recently, especially, have gotten all of these good ratings is because of how well it's performed and because of the potential it's now shown. Previously, it's already shown very good potential. But with the recent earnings, those potential projections have actually gone up by a ton. And the reason for this is because of what can possibly happen when we progress into the future. You can see, we'd love to see CEO Adam, once this debt situation is gone, buy back AMC shares and issue a cash dividend. This would expose market makers using a naked short selling exemption, selling borrowed shares to profit of retail investors, but don't have to authorize shares to deliver. And now he obviously goes on, and again, I advise you guys to obviously take a look at this. But essentially what we have to understand is we've seen, and you should know by now, that whether it's CEO Adam Aron or whether it's just the operations in AMC, they are trying their best to put AMC in the best position possible. And we've seen this reflected with the recent earnings. And now, one thing they've obviously always been trying to resolve is the debt situation. We've seen the restructuring, we've seen paying off debt, and so they're doing very well on this. Now, as we continue to tackle this problem, as we continue to improve this matter, we're going to get to a point where the debt situation will be completely gone, where AMC will be in a very healthy cash flow. And then when that time comes, to me, I personally do believe that Adam Aron will do something of the sort of whether it's buying back shares or issue a cash dividend. We have to remember AMC at one point in the past used to be a company that issued out dividends. And so when they are in that position again, it wouldn't surprise me for them to issue out dividend, especially because of what it will do, what it will imply. Firstly, when you issue out cash dividends, that's already attracting investors because that shows how well AMC is going to do. And once again, people love to invest in dividend issuing companies. But secondly, and the most important factor, and is why it will attract just more than the normal dividend investors, but a whole bunch of different investors, is because when AMC issues out the dividend, it's going to put these short sellers in a very, very bad position. You can see everyone is going to know soon the dividend is the ultimate end game. A direct hit that must force payment and taxable events, liquidation in order to pay, true accountability. Essentially what this is, and for those who don't know, is when a company issue out a dividend, the short sellers of that particular company are actually responsible for paying out the dividends first, meaning for however many shares they've shorted, they have to pay the dividends for those shares. Now, already, when you take a look at how many shares they've shorted of AMC, that's already going to put them in a bad position. But then you account in all the synthetics that they've created, the billions of synthetics that they've created. And even if AMC were to issue out a low dividend of something of the sort of, depending on at that time, whether it's 10 cents or whether it's $1, you can do that. You can understand how much that will affect the short sellers. If it's 10 cents, even if it's just a billion shares, that's $100 million. If it's $1 with a billion synthetics, that's $1 billion that they have to pay out. And remember, I'm only giving 1 billion synthetics as a number. What we've seen in the past is that there is way more than a billion shares that exist out there. And that times by however much a dividend is going to hurt these short sellers. And remember, this isn't, maybe a one-time payment isn't going to hurt them. But if AMC is constantly issuing out dividends, whether it's a monthly dividend, whether it's a quarterly dividend, a semi-annual dividend, annual dividend, wherever that is, as it goes on and on and on, it's going to burn into these short sellers. They are going to have to spend hundreds of millions, billions, and tens, if not hundreds of billions of dollars just to pay these dividends. And it will come to a point where they will get liquidated just to pay these positions, and then they will have to liquidate everything just to cover these positions. And right now, they don't have the money to do so. When you take a look at the reverse repo, $31.96 billion. They don't have easy access to liquidity anymore. They are all stuck in a position where they don't have no more capital, when they don't have no more liquidity. And so they won't be able to survive for long once AMC issues out the dividends, and is why I said it's extremely important. As always, guys, none of this is financial advice, so do take a while to get it. If so, make sure to do your own due diligence and research, and I'll catch you guys next time.